Alrighty, welcome guys to the end of the week, end of another week, and the end of July. Good Lord, how the hell did that happen? As usual, I'm going to go through the now 9 markets. I'm going to go from 4 hour down to 1 hour, and hopefully we will get orientated for next week. Okay, I said in tonight's update that today was the day for alternates, but it's definitely the time to look at alternate counts, especially in euro dollar here. Okay, so I'll just start, get on with it, shut up and stop talking and start moving. Okay, so this is the 4 hour chart euro dollar, and what I'm tracking right now is, well, what we've been tracking for a while is this contracting triangle and a possible wave 4, which is in current, the operating count is complete, and we should be moving down off the high of wave 4 into wave 5. But the short-term count is where the juice is at the moment, and that short-term count views a possible 3-wave pattern in wave 4 at a higher point, completing at a higher point, about resistance there, the previous 4th wave. So that'll be around 120. So that would involve wave A up, and then a contraction triangle wave B, and then a wave C up. And the only way we'll know that if that's the actual count is if we get a break of that previous high there, and definitely a break of the interim high there at wave C. Well, so let's go down to the short-term chart and get a look at that count. So here we are. This is the hourly chart, and you can see the wave A up, wave B down, C up, D down, and then wave E to complete wave 4. And the interesting thing is, well, we have 5 waves down, and that could either complete a flat correction within a B wave there, so that would be a second wave, so that would be 1, 2, 3, 4, 5 in the alternate count if that happened. The only way you can be absolutely sure of that is if 117.90 breaks, but we'll follow that throughout the week and see what happens. But for now, we're gonna see if the closing high there at on Thursday there was, or the high, sorry, throughout Thursday. The high for the session on Thursday was 117.43, so we'll see if that holds, and we get 5 waves down off that to indicate that wave 5 in green has started. So that's the focus for early next week, is to kind of differentiate between those two counts, and we should be able to do that. Most definitely, if 115.73 goes, well, then we can pretty much be pretty certain that wave 5 in green has begun, and that the breakdown out of the triangle is to the downside. Okay, so let's go down to pound dollar. Pound dollar, we had a triangle again in wave 4, and we have a little bit more clarity in the wave count in pound dollar. There's a kind of a moment of clarity that we need in euro dollar, but I think pound dollar has given us that bearish signal of the completion of the triangle. So let's get down into that and see how that's worked out. So we've got pretty decent 5 waves down off the end of the triangle there, so 1, 2, 3, 4, and 5, and a pretty decent 3-wave pattern to the upside. This 3-wave pattern may also be wave A up. We could be looking at wave A up off the low. We could be looking at an expanded flat wave, or sorry, a running flat wave B, which would be an A, B, C, and maybe a C wave. If that was to happen, then it would threaten resistance, and it would actually threaten the short-term count here. But for now, we've got a nice impulsive move off the supposed wave 2 high. So we're looking down for a break of support at 129.57. We're looking for wave 3 to the downside. So that'll be wave 3 of wave 5 of wave 1. So we're looking for 5 waves down to complete over the next couple of weeks in a large degree wave 1 in green, which would be well, it'll be down here. That's the alternate account there, which I don't think we have to worry too much about at the moment. So for early next week, we want to see that 132.12 hold, and we want to see a further breakdown, a corrective high maybe on Monday, below that corrective lower high below 132.12, and a breakdown below support to offer confidence to this short-term count. Okay, here's dollar yen now, and we moved to this alternate count, which is still long-term bullish, but we've got a short-term kind of correction to complete here. What I'm looking at here is a wave 2, a possible expanded flat, could yet be a running flat. We'll see how that works out. So we've got possible 3 waves down in A, 3 waves up in B, and we're looking for a likely 5 waves down in wave C to complete somewhere around slightly below 108. And that will complete wave 1 up and wave 2 as an expanded or running flat. We'll see how that works out. So let's get down to the hourly chart and see how this has played out so far in wave C, green. Okay, so that's the recent high there in wave B, green. We've got a nice sharp move down, which well, we were expecting a correction initially, and that kind of expanded into an impulsive move to the downside, which kind of shifted focus and kind of triggered the alternate count. So that's where we stand right now. So what I was talking about is wave C down in a possible 5 waves. So we're looking at wave 1, 2, 3, 4, and 5 to break below support there, 108, and complete wave C and wave 2. We could also get a running flat, which would complete above 108, most likely around the previous B wave there. So that would be about 109, 109.30. So that, if we were to get a running flat, that would be to complete around 109. And we could also get a double 3, which would leave us with the 3 waves in wave C. So we could get wave A down. And this is where it gets interesting. Over the last couple of days, we've had this contraction in the range here again. So it's pointing towards a triangle. Now, it could easily break out of this as well, but it's something to keep an eye out for early Monday. If we start getting if we get an immediate break of, say, 111.25, or where that high was, Thursday high, was it? 26, yeah. So if we get a break at Thursday's high, that will rule out this triangle here. But if it continues to contract and you get a spill down out of a triangle, well, then you're talking about overall probably a double 3 correction in wave 2, and we'll get 3 waves down in wave C. So that's all to be decided, all to be played for on Monday. Either way, I think next week we'll probably see further pressure to the downside, and we're looking at a possible target around 108. Okay, and actually, if we do see a further move into a triangle, it should offer a pretty decent shorting opportunity off the end of the triangle. So that end of the triangle would be around the 110 area, sorry, 110, maybe 110.50 or something like that, 110.80. So you'd be looking at a 200 points probably into the target anyway. Okay, so here is the Dow, and I've been tracking this shifting correction for a while now, so months at this stage. I'm pretty happy with the current count. It seems to fit the internal wave pattern quite well, and so far off today's high and the upper trend channel, we've got some selling pressure into the market. So the overall wave that I'm looking at here is wave 2, and we've got an A, B, and C in wave 2. So we've got 3 waves up in wave A. We've got a running flat wave B, which is 3, 3, 5, running flat wave B, and then we've got 5 waves in wave C. And if we get down into that wave C there, let's see how that has played out. And wave C has played out pretty well as a 5 wave pattern, and we've got a wave 3 extended within that 5 wave pattern, and we've got these 2 contractions. So there are 2 contracting triangles at 2 degrees of trend there. And during the week there, I was talking about this lower high in momentum, which has broken down today, obviously with a bit of selling that came off the high. So we have divergence in place. So we've got lower highs in 4-hour MACD and 4-hour RSI, and we've got a break of the center line. We had that pretty solid move up with a constantly diverging momentum. So with a peak in wave 3, and actually a peak in momentum in wave 3 of wave 3. So everything in my mind is pointing to a high and is pointing to a complete 5-wave pattern. Again, a lower high in momentum at a higher price. So we had like the price was continuing to move up, but momentum was slowing down. So that tends to point to a 5th wave completion also. So if we've got wave C complete in 5 waves, then we should be looking for a bearish signal off that high. The fact that we've got a nice trend channel with 5 waves complete, and we've got 3 waves at the larger degree, and price failing to break out above that upper trend channel there, and a sell-off on a Friday as well, which leads me to believe that momentum has, or let's say a shift has occurred, or there is a shift occurring. Now overall I've been expecting a shift for a while now, but the certain amount of signals kind of lining up at this point, which would kind of leave me with a little bit more confidence of the bearish outlook than before. Okay, so for next week, I want to see, it'll be hands off for a while on in stocks until we see 5 waves down and a 3-wave correction. Now that could happen next week. We'll just have to keep an eye on that. Everything else is kind of lined up. The dominoes are lined up quite nicely at the moment, so that's what I'll be looking for next week. Okay, so gold again is another one which I am kind of veering towards the alternate count, and the alternate count in gold is quite bullish, and you can see it here circled in red. It's 3 waves up in wave, a leading diagonal in wave 1, and a 3-wave flat in wave 2. And the fact that we have what could be a zigzag also. We have this lower high here. We've got a nice 5-wave pattern down in a possible A wave, and what can be counted as 3 waves in a possible B wave. And there's a definite 5-wave pattern off that recent high there on Thursday. So we could be talking about, well, either a flat or a zigzag 3-wave correction off a leading diagonal. So we could be talking about a 1-2 pattern complete. And the fact that the price hit the lower trend line and had a nice little bounce off to a higher low so far does kind of shift focus to the bullish alternate in the short term. Again, for the umpteenth time, excuse me for repeating myself, but the operating wave count still expects lower support to be hit at 1204 in a 5th wave, but even at that, that'll be the kind of extent, that'll be the lower extent that I'd be expecting. Well, minimum a break of wave 3, and we should find support at 1204 if the current operating wave count is actually true. But I'm kind of veering towards the gold bull in me, the gold bug in me is veering towards the alternate count, simply because this nice 3-wave pattern within a trend channel and the bounce this evening or this afternoon. So for next week, we have kind of a tight range of price points to watch. So we have the previous 3rd wave low there at 1237.54 or about that. So if we see on Monday that this recent low here at 1218, if that holds, today's low at 1218 holds, and we start to see an impulsive sort of spikes higher and a break of 1237, then we would start to turn bullish in the short term again, but with a weight of pattern behind us, which may well lead to something nice or something pretty positive developing next week, which could be a larger 5-wave pattern back in the direction of the uptrend. So, and on the, just to be devil's advocate for the moment, on the bearish side, we still have that operating wave count, which points to support at 1204. So that's gold for the moment. Let's move on to crude oil. So we'll go to the 4-hour chart of crude oil. Again, we've had a nice breakdown off the high, and we're approaching, well, we've had some support there, a corrective rise off the previous third wave there, the internal third wave. So this week again, we've seen, like I said, a corrective rise, but we've seen this break. The 50-period moving average has broken down through the 200 MA there. So again, we've got a moving average sell signal. We've got a nice breakdown of an extreme in momentum. So we've got a sell signal in place in RSI and in MACD. We've got some. I don't think there's any way that I can count this this retracement higher as anything but a corrective retracement of the 5-wave pattern to the downside. So we've yet to confirm that, obviously, but let's get to the short-term chart and see how this is breaking out. So here's the short-term count. I can count 5 waves down, and bear with me, and I'll trace that out for you. So we've got wave 1, wave 2, 1, 2, 3, 4, and 5 into the. Sorry, wave 1, wave 2, wave 1, 2, 3, 4, 5 in wave 3, 3-wave rally in wave 4, which stayed below the previous wave 1, and a 5-wave completion into the higher degree wave 1 in gray there. Off that low, I'm distracted now at the moment. I'm just, excuse me, I'm trying to gather my thoughts, and it's quite late, and I'm quite tired, and there's a dog beside me. This my constant companion and friend who just comes to annoy you at the very worst time when you're recording your weekend video. Okay, so we have a pretty damn complex move off the recent extreme low, which was a 66.31, and I can't count that in any other way than a corrective rise. And it's, if you bear with me, I'll try and explain my thinking on this. So we have 3 waves up in A. We have an expanded flat pattern in wave B, and we have an ending diagonal in wave C. So things were pointing that way on Thursday evening, and the fact that we've got a break to the downside with a pretty sharp move this afternoon, or late this afternoon, it does tend to kind of point us in the direction of wave 3 down again. So off that wave 2 high, if that is indeed the high of wave 2, well, then we'll have to see another impulse wave to the downside to complete a lower high, give us a lower shoulder, to give us a sell signal down in wave 3. So we're looking for wave 1 and 2 in pink, to give us a bearish sell signal into wave 3. So that's what we'll be looking much like the Dow actually, and the S&P as well. We're looking for a sell signal off a recent high, so that'll actually be a right shoulder. So we may well have, if we look at the 4-hour chart, we may well have a right shoulder there complete off that peak there, the head. So we have left shoulder, head, and right shoulder. So if we get breakdown below that recent low again, that'll point us. It'll point towards a break of $60 anyway, because the projection for wave 3 in gray will be down to break below $60. Okay, so let's get to the S&P. Again, the S&P is looking a little bit better after today. We pushed the limits of the wave count, but with a nice sharp sell off today, that kind of points us in the direction of the bearish count again. So we've got 5 waves down in wave 1. We've got this 3-wave correction higher in wave 2, and we ended in wave C there with an ending diagonal, which was 3 waves up in 1, 3 waves down in 2, 3 waves up in 3, 3 waves down in 4, and 3 waves up in 5. I do get the question now and again, what's the difference between a leading diagonal and an ending diagonal? Well, an ending diagonal is 3 waves within every wave. It's a 5-wave pattern with 3 waves within every wave. A leading diagonal is a 5-wave pattern in a wedge kind of form with 5 waves, 3 waves, 5 waves, 3 waves, and 5 waves. If you can understand that. So it's got 5 waves patterns internally rather than 3-wave patterns to the upside. Okay, so if I haven't confused you even more there, well, then I haven't done my job correctly, have I? So we have a possible ending diagonal here and a nice sell-off off the double trend line, which points me, it offers us a nice clue as to the veracity of the previous wave count. So let's get down onto the hourly chart here. I don't have as well labeled charts in the S&P yet, but I'll get there before I go live with the analysis, which would be, when's that? The week after next. Okay, so we've got maybe wave 1 and 2 complete with a sharp move down in wave 3. We'll have to see these interim lows here hold there on Monday, so it'll be around the 2832 level. Wouldn't want to see anything but a minor corrective rise in wave 4 and then a sell down again into a wave 5 with a break of the previous wave, 4th wave there. So 2790, that'll be a level to watch if we can get, which does mark actually the previous peak there, which was about 2790. So if we get a break of that peak again, yeah, that would be definitely in the direction of the expected larger trend to the downside. So that's the S&P. Let's get to silver. And again, here is silver. We're looking at a very large correction completing in silver in a wave 2 in red. And it's turning out like well, let's get to the daily chart there. We've got wave 1 up way back in 2016, a possible A, B, and then, well, overall in wave 2, it's looking like a triple 3. So we've got 3 waves down in A, or sorry, a double 3, 3 waves up in B, and then 3 large waves in wave C. So the alternate count here is that this spike higher here was a wave 1 and we're working on a wave 2, and it's probably 50-50 between those two counts at the moment, but I'm sticking with the larger one as You probably heard that dog whinging there. I'm sticking with the larger count. Because gold is looking that way as well. So I'm just kind of correlating it with gold at the moment. We have initial support, initial support for this count is about $14, so about $14.40. So if we got a break of $14.40 and a spike higher, well then we'd be on for the higher degree bullish count. So we're looking for a larger move back in a third wave higher. Okay, so let's get to the 4-hour chart. And we'll go down to the hourly chart altogether, hey, for the hell of it. Okay, so the alternate here is not as clear as gold would be, but it's still a possible wave 1 up and maybe an expanded flat wave 2. On the flip side of that, we do have 5 waves down off that recent high there at, can we get a high on that? We get a price on that, 1560. So 5 waves down off a recent high. We could be still working our way down in wave 5 of C. So overall in wave 5 pink there, I'm looking at wave 1, 2, 3, 4, and possible wave 5. Again, on the other side of that, we could be looking at a failed 5th wave to the downside. So that could be wave 5 complete. Initially, we're looking at 1575, and the recent high was at 1560. So next week, if we start getting impulsive moves to the upside, which break above 1560, and maybe even if they make it back up to previous 4th wave there, so that's about 1620. So if we start seeing impulse move towards the $16 mark, well then we're probably complete in the larger degree correction, and we will start to look higher again. And that is silver done. Let's get to Treasuries. Okay, so 4-hour chart in Treasuries, and this is the 10-year Treasury. We're looking at a triangle again, completion triangle in a possible 4th wave in green here. So A, B, C, D, and E. And off that wave E high, we have seen a breakdown, and the price is broken down below the rising trend, the lower trend line of the triangle. I'm starting to mince my words now because my eyes are closing. My eyes will close and I'll still be talking. It's just the way it kind of runs these days at Friday evening after a long week of it. So we could be looking at a breakdown into a 5th wave here. And this 5th wave, I reckon at a minimum it should bring us down below 118, because that'd be the extent of the lower extent of the triangle. So let's get to the hourly chart. Will we go hourly chart? So you can see the completion of that triangle there. You have wave C, wave D there, 3 waves up in wave E, and possible 1, 2 with a 1, 2, 3, 4, 5. I mean, this 3rd wave here could still be completing. We might be seeing internal 4th and 5th waves complete at lower degrees just to complete that 3rd wave. That remains to be seen. Let's kind of expand that a little bit just to see. So again, this 3rd wave down, it did give us a nice acceleration to the downside. We got a nice acceleration is the best way to explain that. We've got 5 waves down, and at the moment we've got a kind of a slowing downside momentum. So we could be seeing a turn up into some sort of 4th wave next week. I doubt that recent high will be the end of the 4th wave. We'll probably see some sort of a larger 4th wave, but we should in general see the 119.60 to 80 level. We should see that hold even as a fourth wave completes. And then we should see another further 5-wave decline into a fifth wave. And like I said, I'd like to see that at least that previous wave D breaks. That'll be 119. And in general, a kind of a larger view of this, we'd be looking for 5 waves down and 3 waves up to complete a bearish sell signal. Okay, so that completes the markets. I hope you have a great weekend. Godspeed, everybody. See you Monday.